Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Chris Blasi of Neptune Global. He's the creator of the PMC ounce. Chris, welcome.
Thank you, Max.
All right, this is a brand new product in the universe of precious metals. And so, PMC ounce, what is it?
Okay, so it's actually a patented financial asset. It received its patent in 2013. So it's been in the market several years, but it's getting a lot of traction now. But really the origin of it was I looked to create something that would marry what people see as the ease of trade and liquidity and visibility, price visibility of an ETF with physical precious metals, you know, the old style owning bars and coins. So what we created was something that trades like an ETF and is actually diversified, which takes even what ETFs offer a step further, and created a physical precious metal investment asset.
Okay, so we have four precious metals or monetary metals: gold, silver, platinum, and palladium. They are all in this, you could call it an index, if you will, and it's the PMC ounce, but it's not a physical product, is it? It is an index.
Well, actually it is. There's an index and then there's the investable product.
What, the product is not a coin, though?
No, it's not.
Right, but okay, go ahead.
Sure, I'll expand on that. So it is, we have the PMC index, and then there's the PMC ounce, which is a way to invest in the PMC index. So we did not take good delivery bullion or good bullion and melt it down and make a coin that would kind of destroy the physical properties of it and kind of take away its liquidity. So what it is for each PMC ounce you buy, a fixed fractional amount of gold, silver, platinum, palladium is into an allocated account in a non-bank bullion depository, and then it's recorded in the customer's name. So each PMC ounce has the same fractional amount of each metal, and it has been weighted, so it's a logical diversification. We wouldn't put the same amount of dollars into palladium as we would gold, but giving it this diversified, it's basically a turnkey diversified portfolio. We found, and when we created this, we looked at the precious metals pricing going back to the 80s, that we created a product that with the exposure to especially the platinum and palladium, we kind of have a product that has less volatility than being in one of the individual metals on their own, like gold or silver. And that's the goal of the product.
Okay, so I call up and I say, I want to buy a PMC ounce, and you all know instantly that this means you're getting four metals allocated, you're getting allocation into these four metals per the formula.
Correct.
That constitutes a PMC ounce. And that formula is constituted by these four precious metals. Now, silver, gold, palladium, platinum. So I immediately noticed that the composition of the ounce, it has 93.75% silver, 3.5% gold, 1.7% palladium, and 1% platinum. How did you come up with that weighting?
Great. You know, the first reactions when people say that, they say, well, this is all silver. So from a physical perspective, yes, it is mostly silver. But we know the pricing is different, and the ratio, gold-silver ratio, says if you were going to have an investment that was half in the gold, half in the silver, it wouldn't be ounce per ounce. You know, you look at the dollar amount going into each. So, you know, we looked at these metals over time, and what we came up with is that fixed amount, basically 52% of each of your investment is going into gold. And gold is the primary go-to metal. Even though silver is 93.75% physically, based on the amount of dollars going in, it represents about 22% of the investment, and platinum and palladium being in the teens.
So it's dollar weighted, not weight weighted.
Exactly. And that's so we actually show that on our website, on our products page. We show the physical composition and also real time what the component values are.
Let me play devil's advocate for a second, because of course that gold-silver ratio fluctuates.
Correct.
And the people buy precious metals because they like it for the weight. Mm-hmm. They quote it in weight. It's weight. That's the great thing about it. It's weight. And people say, oh, gold's down sharply. And I said, I still have X number of ounces. My ounces didn't go away. You know, they always love to quote the weight. Yeah. So why not just have an equally weighted coin? Isn't that commensurate more with the spirit of precious metals buyers?
Well, actually, this really achieves exactly what a buyer needs for a portfolio. But the physical composition has to be equal for a PMC ounce sold 5 years ago or 2 years ago as one sold 3 years ago. If we based, if you made it customized with each new investor, you do not have an interchangeable ounce that can be broadly distributed. And if you're selling and the other individual is buying, the exact amounts of metals are now exchanging.
Okay, so the key though, so the weight, the key is that these ratios don't change. 93.75% of silver, that never changes.
Correct.
That's in the PMC ounce. So when you buy the PMC ounce, you know that you're getting that composite, and you're roughly the dollar per each investment's approximately equal. So you're approximately getting equal investment in these four metals.
Correct.
And that's your goal.
Correct. And actually, we have a very good tool on our website called the PMC calculator.
Right.
And really what it allows an individual to do is do a mock trade. It's all in real time, so it's not static numbers. But you see exactly, you enter the number of PMC ounces for purchase. You know, it shows obviously the per ounce price and total trade amount. But more importantly, it's showing you how much gold, silver, platinum, palladium you're acquiring, how many dollars went in, and what percentage of your overall investment went into each of those metals.
Okay, so let me ask you this. So if you're a money manager or you have a portfolio you're managing, and your goal is to put a certain percentage of your portfolio into precious metals, and this allows you to do that in a cost-efficient way.
Correct.
on a dollar per metal basis. So you're not, so just forget about the weight here. You're just saying, I want to put 10% of my portfolio into precious metals. I go into the PMC ounce. It's a virtual ounce, if you will. It's not an actual physical product. However, it's backed by actual bullion in the vault, I guess.
Correct.
Is that bullion allocated in the name of the customer?
It's all allocated to the PMC ounce, and the depository records all the owners of those PMC ounces. We actually have a dual reporting system. Transaction confirmations come from us, but the depository also confirms the arrival of the metal and the allocation in the client's name.
Okay, who is Neptune Global? Okay, you're with Neptune Global. Who is Neptune Global? I never heard of Neptune Global. Well, who are they?
Okay, so we've actually been around since 2002. We're a full-service precious metals dealer, but the product, the creation of the PMC ounce has really differentiated us. And over the last 2 years, it's driven our business 4x. And 2 years ago, the PMC ounce was about 25% of our business. Last year, we were about 70. So as investors become aware of it and they see the logic of it, we show right on our homepage the performance of the PMC ounce versus gold and silver going back to 2008. And you can see that the PMC ounce has a much smoother blended return versus something like silver, where a lot of people, piled into silver in 2011 and 12.
Really? Is that fact?
One or two folks. Yeah.
Wow.
And
oh yeah, I do remember that.
Yes.
I do remember that. Yes, that's right. That's correct. So go ahead. Sorry.
So yeah, and this is why that little exposure to platinum, palladium helps. A great example is in 2013, 14, and 15, as silver and gold pulled back, people weren't aware that palladium was doing well. Palladium's doing excellent right now.
Yeah, why? Why?
There's a host of reasons for that. I mean, a lot of it is considered supply shortages. There's getting to be a little bit of a squeeze. And you're really seeing palladium close the gap with platinum. I mean, it's performing
Well, platinum is used in catalytic converters, right?
Correct.
And then palladium, what's it used for?
Same thing. Platinum and palladium are both used in catalytic converters. Platinum is used exclusively for diesel. In gasoline engines, you use platinum or palladium. And basically, they can use either one as a substitute. They kind of look at what the pricing is. And as technology gets better and maybe they get a little more efficiency out of palladium, you'll see more palladium used.
So in other words, I send you guys a check from my bank, and you buy this PMC ounce, and it's liquid, so I can give you an order to sell. You go back into cash, and you would send it back to my bank.
Absolutely.
That's the relationship.
T+2. It's fully liquid, and it trades in real time, and there's no delay.
T+2, so a settlement date, you're saying?
Correct.
It's a 2-day settlement date.
Exactly.
Like any other security.
Correct. And that's just moving the metal then out of your name into our account, so we can either sell it back into the marketplace or just hold it for the next until we have to add it to someone else's account.
All right. So now you guys in the precious metal industry have a lot of competition now with cryptocurrencies like Bitcoin.
Yep.
I mean, even a couple of years ago, if I said that they were competing with each other, the precious metals folks would be like, "Ha ha, that's crazy. It's never going to happen." But now you've got over $100 billion in crypto, and you have a new generation brought up on crypto. This millennial generation doesn't know gold from kryptonite. They don't know it. They know Bitcoin.
You're right.
So is it a genuine competition? How do you see that these two working out?
Actually, I know there's a lot of contention with some of the folks in the precious metal space versus the cryptos, and I don't think that's really accurate. I think right now, there's obviously much more focus on what's happening with the cryptos because of Bitcoin, and the precious metals are always being interfered with, and the feeling is their price is suppressed. But at the end of the day, even though cryptos may be suppressing the precious metals a little bit now, I think it's actually going to be good for them in the long run, because the cryptos are challenging what we call the status quo, and the status quo is really the enemy of the precious metals, right? So as the status quo continues to get challenged, that will be good for precious metals. And then it's on our part to help educate the younger generation that both should be in your portfolio. It's not one or the other. It really should be both. And I think the PMC ounce also appeals to someone who are looking for something that's maybe a little more thoughtful, a turnkey, diversified portfolio. The metals don't move in lockstep. They are all precious metals, but they have different drivers, and they perform differently at different times. Again, I'll go back, palladium being a tremendous example, totally outperforming all three metals over the last several years.
Gold, I believe, over the past 10, 15 years or so, it's been moving up on average something like 7% a year. Mm-hmm. Have you gone back and figured out what a PMC ounce would be over the past, backdated it over the past 10 years? Well,
we have it right on from 2008, and it's right on our homepage.
And what's it been doing?
It's as of last night, it was up 66%, which has outdone both
basis. What
gold and silver. Well, 8 years. You do the math.
No, you do the math.
About 8% a year.
So it's outperforming
gold and silver
by a bit.
Yes.
Okay.
But the point is, it's not a managed fund. We're not here buying and selling, trying to market time.
Right.
The value is we're mitigating the high volatility. So if you look at that chart on our homepage, you say, okay, it's a little bit ahead of gold and silver. Now, silver was
with less risk.
With less risk.
It's risk adjusted. It's doing enough to warrant getting involved. Let's put it that way. So
exactly.
Performance could be outperforming, but on a risk adjusted basis, you have a smoother entry into this precious metal market. You don't have the volatility quite as pronounced, I guess you could say.
Exactly, and we all know that true portfolio management is managing the volatility. It's not just chasing returns. So,
right. I mean, that's what people completely miss. That people get rich not by making money, but by getting rid of risk.
Exactly.
That's how you make money.
Exactly.
It's not by making money. It's by not having any risk. And that's the key to it.
And that is
You used to work at Merrill Lynch, right around the corner.
Yes, I did.
I used to work at Payne Weber, right around the corner. We probably bumped into each other at Harry's at Hanover.
We may have.
Back in the day, over a triple scotch and eggs Benedict or something.
We may have.
We're out of time. We got to go. Thanks for being on the Keiser Report.
Thank you very much, Max.
All right, well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest. It's Chris Blasi over there at Neptune Global with the PMC ounce. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.